of the debt which we have paid over a period of 9 months. Further, the interest expenses which is reduced to zero or negligible amount, this is on account of the positive impact of forex on derivative instrument.
Okay. Got it. Thanks.
Thank you. The next question is from the line of Nirav Jimodia from Anvil Research. Please go ahead.
Yes, sir. Good afternoon, team. So I have 3 questions to ask. So, first one is on the utilization of caustic soda plant for Q3FY25. In last quarter, you mentioned that it was close to around 75%. So, if you can share the numbers for this quarter, sir.
So, for this quarter, the caustic soda capacity has been utilized around 80%. Utilization we have achieved in Q3FY25.
Correct. And last time you mentioned that our ECU was close to around, or ECU was close to around 26 rupees, with the chlorine being negative at around 6.7. So if you can share the similar numbers for Q3 of FY25 and how we are seeing, because most recently we have seen some spending in the prices of caustic soda in the Chinese market too, plus some shipment issues and the freight cost also going up. So if you can share the numbers for Q3 of FY25, both in terms of ECU and the chlorine negative, and how are the trends currently looking?
So on the caustic soda side, the realizations for the caustic soda had been in the range of around 43,000 per ton kind of thing, and chlorine is negative around 9,000 kind of thing, and that's where the ECU has evolved around 32,000 kind of thing. And considering the current situation, it has been in the same range as of now also. In between, it has peaked to a level, but again it has controlled the levels where the ECU is again around 31,000. So I guess we believe that it should be in the same range in the coming months.
Got it. So just one question here. So let's say if we have a 4 lakh tons of capacity and 80% utilization, so close to we have produced around 80,000 tons of volumes of caustic. What we said is that ECU has improved by cost close to around 5 rupees. So if we just multiply 80,000 tons and 5 rupees of improved realization, the number comes close to around 40 crores. 17 crores is what you explained that there were the increase in the other expenditures due to the freight rates going up, and because probably on the export side. So was the difference of that 40 minus 17, 23 crores is because of the lower realizations on the other products, or where the margins on the other products were slightly suppressed this quarter, or if you can share those differential, that would be very helpful, sir.
So, if we put it, in terms of the chlor-alkali and the derivative segment, in both the cases, the margins has been around to the similar levels of what we generally guide, that is around 25%. But if you see the ECU has gone up to around 32,000, so that definitely helps us to sustain the margin. So in terms of, if I put in terms of the derivative side, then there is the marginal price is up and down in each product. It's not drastic up and down. It's some might be maybe low by 3-4% and some may be increased by 3-4%. But overall, the capacity over there, in terms of the capacity utilization, has been almost a stagnant or bit lower compared to the Q2. So that's where the chlor-alkali percentage in terms of total contribution has reached around 50%.
Got it. So just to add it slightly here is just to reconfirm, Milind, by that.
And one more thing, the coal and salt price is also not constant for quarter-on-quarter basis.
Okay. So there were no increases on the coal side also for us, or the salt cost also for us in this quarter, right?
Yeah.
Correct. The second question is on the peroxide side. So I think we have a 60,000 ton peroxide plant, and we utilize our own hydrogen here. So are we working on some special grades of hydrogen peroxide, which are like generally the wet chemicals, which are generally used for all those circuit cleanings and everything? So because now we have been producing this peroxide for quite a longer period of time. So are we trying to do some value addition here or through our own R&D? If you can share your thought process here, it would be very helpful.
So hydrogen peroxide right now we are selling almost most of the application. some of the high quality, which is like a food grade and which is used and which is required, that market is very small. So still we are evaluating whether we will make such kind of grade, because market of that particular grades are very small. So definitely it is going to improve in the future, but that is not we are looking right now. But in the future, once market will be enough, then definitely we are going to set up and we will make that particular grade also.
Got it.
Currently we are not making those grades right now.
And the
But
last,
we know how to make those grades. We can make those grades, but currently we are not interested because of the volume.
got it. And so last clarification, our total requirement of power put together for all the integrated complex is close to 140 megawatts, or it is slightly higher than this?
Close to entire campus, we have a 134 megawatt captive power plant, and we are also using government power also. So close combined, you can say around, it's around close to 140 megawatt is our requirement,
Perfect. Thank you so much, sir, and wishing the team entire team all the best.
Thank you.
Thank you. The next question is from the line of Rohit Nagraj from B&K Securities. Please go ahead.
Thanks for the opportunity. So the first question is regarding the fluorotoluenes that we have now. The first segment or first phase has been commissioned, and we'll be commissioning the next two phases in this quarter. What is the strategy in terms of seeding the market? Have we already seeded the market? And given that part of the project has been commissioned, how has been the plant behaving in terms of initial operations? If you can just comment on that. And the strategy to seed and expand the market in FY26. Thank you.
So yes, the chlorotoluene project is almost, the last phase of capex. I think we have done in this last couple of months, almost done, and then I think we are going to do the commissioning in end of. It's already going on in phases manner. The entire capex will be over probably in this month, and probably in next, or probably maximum in March, we will commission the project. And the project, this project is having 10 to 11 products differently. So every product we are taking a trials right now, and once it is given to the customers, after sampling, we will get a trial order, and then we will start doing. So already we started doing it, but right now that activity will speed up in this quarter as well as in the beginning of the first quarter of next year also. And we are expecting, we will reach revenue generation will come maximum from the second half of next year, because this entire cycle of sample approval and the trial orders to the export market as well as the domestic market will take little bit time. It is not going to generate like other products. It will start operating at the optimum level from the beginning, because it is 10 to 12 products. It is not one particular product, and each campaign will take little time and to establish with the customers, as well as to give a confidence to the customers that we can supply their quality as well as the quantity also. So we are expecting the revenue generation will start from the second half of the FY26. But commission of the project will be done in next 1 month or next 45 days time.
So that's helpful. Just one clarification here. So second half would be the revenue generating phase. After that, can we take say 2.5 years to reach the optimal utilization level?
So not 2.5 years. I would say to optimum level, I think we will reach by end of FY26 only.
Okay, fair enough. So the full impact should start coming in from FY27.
Full impact, yes.
Fair enough. Second, a similar question on ECH. Now, given that we will be again expanding the capacity and we've already tapped partially the exports market, what is the strategy going forward in terms of utilizing this particular project, given that domestically another player will also be coming in for competition? So we'll have to look out for exports market. So what is the strategy that we are looking when we will probably commission the project sometimes in first half of FY27? Thank you.
So, currently our plant is running at the full capacity, but going forward we have expanded this capacity. And the reason behind, once we focus on the first project, when we commission the first project, when we establish and when we decide the first project, that time India's capacity was 80,000 tons of ECH. But that capacity has increased in today's time, and probably by next first half, another big player is also coming into the epoxy resin market, and it will reach to almost 150,000 tons Indian market. So Indian market is also growing, along with we are also expanding. So yeah, there may be a timing difference, plus or minus, but eventually I think the Indian market will absorb the quantity which we are going to produce in the long term. And meanwhile, we are also exporting to European countries, and that will also continue going forward also.
Yeah, this is helpful. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Pujan Shah from Molecule Ventures. Please go ahead.
Hello, am I audible?
Yes.
Yeah. I'm audible. My first question would be on the CPVC. So, what could be the current realizations and what are the expectations in the sustainable margins in the CPVC going forward?
So current realizations for the CPVC is around 1,35,000. And considering the current situation, we tend to, the margins that we have in this also is around the same thing, 25% that the company as a whole. So we tend to believe that we will be able to continue that sort of margins as well in the coming times.
Okay. So, assuming the incremental capacity coming in FY27, and we also commissioned the new capacity of 75,000 in H1 FY27. So, at that point of time, assuming the global scenario remains the same as of now, so do you think there would be any dumping impact on the CPVC, and there could be impact on our realizations, which could ultimately lead to margin deterioration in FY27-8? What are your views on this, sir?
Currently also, if you see the CPVC market itself is growing in a double-digit percentage, barring few quarters it can be that it is subdued, but otherwise on a longer horizon over a 5-year period, we expect the CPVC demand to reach around 5 lakh tons. 5 lakh tons by FY 2029 or FY 2030. So considering that the India demand is there, even the new capacities that are supposed to come, that will absorb the capacity that we are putting. So even today, like as of today also, considering the India demand, still more than 50-60% is something which is net through imports. So even once we come with our capacity of additional 75,000 and the domestic other capacity, India will be still importing the CPVC resin. So there is a good demand for India. And CPVC resin, considering there is a good focus and the demand is majorly in India, it is not a global market driven, it's majorly the Indian market driven. And that's where we are positive for this segment to grow, and along with that even we will grow in our CPVC business.
Okay. And sir, what could be the difference between, let's suppose, assuming if a person has been setting up a brownfield project versus a greenfield project, so on our total cost of per TP, it's around 60-70,000. So do you think it remains the same as for the expanding capacity which is being coming in by 75,000? So will it be in the same range, or it would be impacting because of any other reason?
Currently what we have announced so far, the CPVC expansion, what we are doing is almost in the same range what we have done in the past. I would not know about the others, but it has been remaining the same range of what we have done in the capex in the past.
Okay, so we have a sufficient land over there, and we have been able to expand in the same plant.
Yes, yes. So currently what we have 75,000 in the complex, we are expanding another 75,000. So the additional 75,000 expansion is happening in the current complex itself. So the land that we have, there is a space for the expansion of additional of CPVC as well as the epichlorohydrin.
Right. And last question would be on the CPVC manufacturing. Why it is been difficult? I understand the technology. Few our competitors have also been building and have been associated with a technological partner. So why it becomes a very difficult thing to manufacture, and what could be, and why it takes 2 years to ramp up, understanding the approvals of the customer? But is there any technological advantage, or is there any other reason out there?
No, it is not because of the technology, but majorly it is because of the customer approval, and it is a little longer process compared to other products in the CPVC, and that's why it is taking little more time.
Okay. So potentially our approval would be on the line. Whenever we started and we commissioned the new capacity, we can reach capacity utilization to 80 to 100% in the same time frame. Due to we hold all the approvals as well as the technology, right?
Yes. Again, we need to take approval of the customers, definitely, but we have experience already of last couple of years. I think now we can speed up and to reach the optimization of the new facility which we are setting up compared to the past.
So optimal utilization of that new capacity will be recognized in FY27, or it would be reflecting in FY28, the whole capacity of the new the 75,000.
So optimum level probably we might reach by end of 27 or beginning of 20. Yeah, because it's a large capacity. Yeah.
But the full benefit of full year benefit will be visible in FY20.
Yes. Got it.
Yes, that's right.
Thank you, Maulik sir. We'll get back in the room.
Thank you.
Thank you. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. Sir, can you please share how much revenue are we expecting from our capex of 780 crores in CPVC plus ECH?
So the capex of
we are expecting close to 1,000 to 1,200 crore. Once it reaches to optimum level, yeah.
Yeah, optimal level. And what is the present realization of ECH, if you can share that?
So ECH realization is currently around 1,05,000 to 1,10,000, in that range.
Okay, and going forward, is it going to stay within this range, or is it also volatile?
So the price of the raw materials are increasing globally. The logistic costs are increasing. So definitely the epichlorohydrin price also will increase going forward.
Okay, noted. And how much revenue are you expecting this chlorotoluene to contribute once it runs at optimum capacity?
The turnover which is at the optimal capacity, when the plant runs at the optimal capacity, we expect that 350 crore of top line from the chlorotoluene project.
350 CR. All right, thank you. Those are my questions.
Thank you. The next question is from the line of Meet Bhatt from Alembic Pharmaceuticals. Please go ahead.
So I wanted to understand the anti-dumping scenario, how anti-dumping on PVC. So how it is going to impact us, and whether we will shift our purchase of PVC from importing from other countries to Indian manufacturers, and if yes, how will it impact our margin and
Definitely there is a change but I think people are operating, even though we are manufacturing caustic soda and other derivatives also, but we have an independent profit center in the products and the derivatives. So the CPVC is going to be the independent profit center, whoever is coming in the future, yeah.
Okay. And last is just the bookkeeping question. What is the volume growth for Q3, overall volume growth?
So volume growth for Q3 is around 11%. 11%.
Okay. So it's QOQ, right? Not YOY.
It's YOY.
I'm asking QOQ.
QOQ, it's around 1%.
Okay. And what are the capacity utilization for CPVC and ECH?
So capacity utilization, as we said earlier, it is around 80-85% capacity utilization, and for CPVC it is around 50-55% capacity utilization.
Okay. That's it. Thank you.
Thank you. The next question is from the line of Naitik Mohata from Sequent Investments. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Most of my questions have been answered. I just wanted to clarify again, how has our interest costs reduced to almost negligible in this quarter?
The interest cost which was there in the quarter 2 has become a negligible quarter 3. The major reason is that the company has made a substantial payment of debt in this quarter, and along with that there has also been a positive impact of derivative contract on the mark-to-market provision. So that is the reason the interest cost reflect negligible in the quarter 3.
Okay, so this is because our debt was in foreign currency?
No, actually there's not a foreign currency, but we have one structure as a reverse swap, so we have a positive impact in this quarter against that.
Okay, so from next quarter, can we expect that the finance cost would return back to like 15 crores level on a 600 crore debt?
Yeah, around 15 crores in this quarter 4, that is.
Okay, perfect. Thank you, ma'am. That's it.
Thank you. The next question is from the line of Harsh Mehta from Code Advisors. Please go ahead.
Hello, good afternoon, team. I just had a question regarding the revenue margins and costs. So is it possible if you could give us a rough breakdown of the margins from the caustic soda segment and the derivative segment, gross and EBITDA margins?
So we actually do not share product-wise gross and EBITDA margin. But as we had specified earlier, I mean, whenever we enter into any kind of a project on a normalized situation, even the chlor-alkali and even the derivatives gives us a margin of around 25%. In any specific year, one time the derivative will be on a higher side, the other time the chlor-alkali will be on a higher side. But overall put together, it's 25%. But it will be difficult to share the chlor-alkali and the derivatives margin separately.
Got it. The second part of the question was regarding the costs incurred. So the total cost of the raw materials which are required, is it possible to give a breakdown how much of the costs are associated with chlor-alkali and how much are associated with the derivative segment?
I doubt we have that number as of now in hand. We can take this offline as well.
Sure, I'll look to connect with your team.
Sure.
Thank you so much.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Good evening, everyone. I'd like to convey that we are moving in line with our strategy through our expansion plans and diversification in terms of multi-product catering various industries. We are targeting consistent growth. I would like to thank all of you for joining us here today. Please feel free to reach our IR if there are still any unanswered questions. Thank you everyone for your participation.
Thank you.
Thank you. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.